Let's talk a little bit today about how to spot the end of an impulsive move, especially the fifth wave. I am your host, the Cowboy. This is ELLIOTT WAVE Cafe. Let's get started. All right, so what you're seeing here on the left, I have what it's called an ending diagonal, and it is a motive wave and unfolds in 5 waves. It goes 1, 2, 3, 4, and 5. You see overlaps between wave 4 and wave 1. You also see that wave 3 is smaller than wave 1, and wave 5, it's usually smaller than wave 3. This is the contracting variety, which I'm going to talk a little bit about today. And then we also have the expanding variety, when actually, wave 3 is larger than wave 1 and wave 5 is larger than wave 3. Those are very rare formations. The ones that you're going to find the most in your trading, in the charts that you're watching, it's going to be the contracting variety. So once again, you're going to have a wave 1, a wave 2, that's larger usually than a wave 4. Then you have a wave 3, smaller than wave 1. Then you have a wave 5 that's smaller than 3. Now inside this impulse legs, in a wave 1, wave 3, and wave 5, you're usually going to get zigzags. So these are going to be 3-wave moves and are not going to be 5 waves. So it's very important that that's the rule there. And when you look for an ending diagonal, one of the things that help you identify them is they're going to be choppy and they're going to look like 3-wave moves to new highs. So you connect the 1-3 line, you connect the 2-4 line, and then you're going to get a bit of a throwover on a 5th wave that's going to break that line, and then the markets will start to reverse. So here is how this looks on a larger, let's say on a larger degree in here. You can look and see a wave 1, a wave 2, 3, 4, and 5. Now, the example that I have today is a little bit unclear when it comes to an ending diagonal, but that's not the purpose. The purpose of this video is basically how to identify at the end of a 5-wave, a 5th wave within a larger impulsive sequence. This could be a regular impulse. It could be, an ending diagonal, right? And between those two, there are certain clues that you need to look for to find out when the top of the market is in. So I know, a lot of people like to pick up tops and it's really rewarding when you're looking at the charts and say, well, I think we're approaching the top. Let's see if we can get it. It's a little bit of a dangerous endeavor because, you're basically going against an outgoing trend, right? But this is where ELLIOTT WAVE comes in and can help you identify some of these levels. Now there are, riskier ways to, take advantage of these, and there are more safer ways to get advantage. I'll talk about them here in a second. But basically, this is what I'm looking for when I look at an impulsive move and I see a market that's been running wild for a while. Then I look and the first thing that I look for is a wave 3. I want to see a strong 3rd wave, and I want to see a wave 1 as well. So I want to see the impulsive sequence being clearly identified on the chart. So I want to be able to start to count 5 waves. Now, just because you can count them, again, it doesn't mean that you necessarily have them. This move can continue to go, 1, 2, 3, 4. This could be 1 of 5, 2, and then you can go 3, 4, and 5. So you're really never going to know what the market will do for sure. But, you can start to put odds in your favor if things start to look, a certain way on the chart. So the first thing that I need to see a 5-wave sequence in here. Okay. It's a 1, 2, 3, 4, and 5. And this 3rd wave needs to be strong, and it needs to be, clearly identified. And then that if that's a 3rd, then the next move higher, it's likely it's a 5th wave in progress. And that's where, the next details come in, and you're looking for a move lower, usually towards the 4th wave, here, low, and that's usually a pretty good trade to kind of take. So for this, we're going to jump over, I know maybe a lot of you are not necessarily interested in natural gas, but it doesn't matter. It's just an example. A lot of the markets look very similar, and these patterns just kind of go across, you know, the spectrum here in any asset class you look at. But natural gas was a market that I've been watching for a while, ever since it broke above this consolidation here in this fourth wave. And I was looking to see, you know, how this fifth wave completes. You remember just a few months ago, you know, there was a huge crisis in natural gas, and people were talking about how expensive it is, and the, you know, the Ukraine crisis, and the, you know, the lack of flow of natural gas to Europe, and prices, you know, going kind of crazy in the energy markets overall, not just in natural gas, but it happened in oil, happened in commodities, and everywhere. And those were signals that usually then, when this news starts to appear in the media, that these are you're usually in the last phases of these moves, and those are fifth wave. So you kind of have to combine a little bit of, you know, looking at, you know, at kind of what's happening in the sentiment, not just necessarily to the chart, but charts will give you a pretty good example. So if you can stop the video here, if you want to take a shot and kind of counting this from this low to this high, it should be pretty easy. You know, you can identify, you know, what these moves are in here and kind of how it looks. And for me, it was pretty clear then once we broke above these levels, there's probably going to be, you know, a fifth wave developing, because what I've identified here, if I've identified a pretty clean third wave type advance, right? And the wave one in here was, you know, not as strong necessarily. They had quite a bit of overlap. And if you want to ask me, I think this is an expanding leading diagonal in here. You can look at the 1, 2, 3, 4, and 5, right? I mean, if you take this overlap, it kind of pushes you into that direction. Wave 1, it's small. Then wave 3, it's bigger than wave 1. Wave 5 appears to be bigger than wave 3. Wave 4 is bigger than 2. So this has got the characteristics of an expanding leading diagonal. In leading diagonals, in contrary with what happens in ending diagonals, the internal waves can be impulses, so they don't necessarily have to be zigzag. So you can have a wave 1 in 5 waves, a wave 3 in 5 waves, and then a wave 5 in 5 waves. So anyway, this appears to have been a wave 1. Then you're pulling back here in a second wave, and then you have a large third wave. Then you do a fourth. See in here, wave 4 never makes it into the territory of the wave 1, and then you push up higher, and you're starting to create a fifth wave. And then this last sequence here is the one that drew my attention a lot, and I started to you know, talk a little bit about it in the I think on Twitter and on my videos, and I talked to my members, and I said, listen, natural gas, it's a market that we need to pay attention to, because it's probably going to be a pretty good vehicle to short, especially because this is one of the markets that when it goes and it gives you and it rewards you very, very fast to the downside, right? They usually kind of climb pretty fast, but they also drop very fast. So it's a very volatile market. It's not for everybody, but it is, you know, it is a market that actually showed us that there is a terminal formation up into these levels. So this is kind of what I wanted to focus on and kind of show you how this kind of gets identified. And I don't even have to talk much about, you know, the RSI, but you can see in here, and I'm going to show you a smaller picture, as the market was making new highs, barely squeezing to continue to push higher. Everybody had a big frenzy about the natural gas prices hitting $10 and this and that and the other, but all the while the market was basically showing you that it's slowing down the rate of the ascent, that it's losing strength, and then it's very likely going to start to collapse on its own. And these are some of the messages that I've posted into the room. So this one was on May 5th. I said, hey, and this was kind of a, you know, just a throw out there. Hey, you want to hit a home run trade? You can scan for natural gas shorts. I mean, one trade here and you're off to the beach for the rest of the year. So sometimes in these markets, you don't have to trade them a lot, but when you catch, when you smell blood in the water, when you smell that a move, it's about to kind of get finished and you want to get ready for it, you might wait to some volatility, right? You might try a couple of times, but you know, keeping your powder dry and making sure that you're ready for a short in situations like this can provide you with great returns. You know, when you see something like this, and it could be 1 or 2 trades like this a year, and you can take off, right? So this because they can provide great returns. Now on the May 20th, I also showed this chart in here where these formations were very, very similar as the market was kind of getting tired up into this move and created a big sell-off. It happen on a similar structure. So it, you know, we look for the similarities in price to kind of tell us what's likely to happen. Then I've opened on May 17, I've opened a short trade in via the futures. I've added to this position a couple of times. Entry 827. My final entry was about 853 right in there. And we've squeezed about about $7,000, 7,187 was a little bit more by the time I closed it off. This was, I took this snapshot just before I closed this trade, and I've had, no, I just had a couple of contracts in there. So it was an awesome trade. It came, actually we closed it at about $7, and the move actually in natural gas extended much, much lower. I think it's trading at $5.60. For me, it was a good enough of a trade because I caught up that larger third wave advance, and I didn't want to squeeze, let's say, the less bits out of it, and I was out of there. But, this is some of the stuff that we do in the program, because I think, scanning for markets like this, it gives you, there's a lot of opportunities out there. So the next one in here, I wanted to show you there's a couple of counts that I've had on it, and both of them are very viable. So one of them was this being a wave 1 with a wave 2 pullback, then another 1, 2, 3, dip 4, and then a fifth wave of a third. You're looking at this, let's say primary is probably, and then intermediate. So then you're pushing back in a fourth wave back towards the bottom of this channel. This trade could still unfold sideways and then push higher one more time. Who knows for what reasons? If he will do, maybe he will never do it. But this is one way to kind of start to think about that. Now, for me, there is not really a trade at the moment in here. I need to wait for something that I recognize, something that's interesting. The sell-off here tells me absolutely nothing other than it's impulsive. There might be a B wave and a C wave. It might be forming a triangle. Who knows what it's going to be, but it's not something that I'm necessarily interested in trading at the moment, right? The trade was before this drop, was back as this formation was forming up into this channel, and with losing momentum, right? That was the trade to the downside. Right now, it's in nowhere's land. So this is one of the way to kind of count this and still maybe assume there's going to be a move higher. We'll see if that happens or not. And then the next one is that this move is actually done, and by that, just because you're never perfect in your counting, you have to kind of look at different things, and this could be another way to kind of count this when you're going again 1, 2, 3, 4, 5. So this remains as a wave 1, but instead this one becomes a flat. So you have a complex move in here. You go down in 3 waves, up in 3 waves, down in 5 in what we call a running. Actually, it's a regular flat because this wave did not go above this one. That's an impulsive move down, and then you begin a larger third. So you do a 1, flat in 2, up in 3, right? Super strong move. That's very, very strong. Down in 4, and then you're finishing off with the fifth wave in here, and you could be done. This could become a larger, 1, 2, 3, 4, 5, and then a B, and then another C, or this is A. You go up in B, down in C. Who knows how this is going to end up being? Markets, we'll continue to watch this towards the end of 2023, and there's going to be any other opportunities in nat gas that make sense, we'll touch this market. If not, we'll move on to something a little bit different. But this is kind of what I wanted to show you. Now I wanted to talk a little bit about this formation in here, because you can see, so as this market was, and when I posted some of those charts with going to the beach, we weren't that high. We were basically somewhere up in here. So it's still at about, $7.75 to $8 neighborhood. And the market crashed, but then it went back up higher one more time, right? So these things don't necessarily happen on the first try, and you kind of have to be ready for it. So even if you take a short you might not have a fully developed fifth wave already, right? Which means that, once you're taking profits, and you have to take them because you will never know exactly how deep how deep it will go, or if it's going to do one more high. So, you can, there's different ways that we do this, right? So you can open, let's say 2, 3 contracts and then take profits in 1 or 2 and then leave 1 just in case the market cracks. Then you move your stops lower and you get out of the break even if the market, so there's certain ways to trade this, right? And I talk about this with my members, but, in this case, this thing just pushed higher, right? Which means that the fifth wave was not over, and it gave us another opportunity to start to think about shorting. And this is kind of what happened. You went higher, and this divergence between this indicator and the price started to get bigger, and then the markets just kind of collapsed. So this is kind of the count that you have on a smaller time frame. So you go up in 1, flat in 2, 1, 2, 1, 2. That's a third of a third. Down in 4, up in 5. Okay, and then down in 4, up in 5, down in 4, and then up in 5. So there is a certain sequence of counts in here that work fine as waves, fourths, and fifths but don't negate the idea that this looks very clean also as a leading diagonal in here, as an ending diagonal in here. As the market moves like that, you can see this type of a pennant, this type of an ending formation, you know, with the drop in the RSI that the markets will give you. And it doesn't necessarily have to be an ending diagonal. Most of the time it is. And maybe even this one, it can start from here and you go in a 1, in a 2, 3, 4, and 5, and I have to change some of the subdivisions, right? I'm not as clean and as clear as you know, some other people would want you to think, let's say from the Elliott wave community, that everything has to be clearly identified on a chart with every single leg. For me, Elliott wave, it's more of a dynamic tool that allows me to understand what's happening within the price, but also understand the imperfection of this methodology. And then not all the time, you know, an ending diagonal will be perfect, or maybe it's not an ending. There's a sequence there of wave 4s and wave 5s within a larger structure that just looks like an ending diagonal, but it's not actually one, right? But it doesn't matter. The result is the same, that the market is getting tired, either via an ending diagonal, either via a regular impulse, and then the next likely move is to the downside. Now, what an ending diagonal does, it gives you a lot of power, because usually those are, the sell-offs are so strong, and they usually come towards, you know, the origin of the ending diagonal. Usually if it starts there, you know, that's where kind of wave 4 of the previous lower degree, that's where they kind of finish. Sometimes, you know, they can come all the way back, all the way down there to the even larger move. So, you know, it's just a matter of, you know, being patient and kind of reading into this and just, you know, identifying how these moves can unfold. And with every single high that you make in this market, if it gets weaker and weaker and smaller, that's a sign that the market is losing momentum. And it could be any indicator you pull in here. You can put, let's say, money flow or volume, or you know, there's a lot of them out there. You know, MACD and I don't know, PPO. There's anything, right? And those things will just all kind of start to diverge, because price is price, and you will send those signals, rate of change. You will send those signals to the indicator, and then it will you know, give you even a stronger conviction. And here is kind of how that move looked on a smaller time frame here towards the end of it, right? This is kind of where I posted the charts, and it kind of continued to squeeze up higher. You can see this kind of 3-wave type moves in here, right? I mean, this is an A, B, C could be, right? And then another A, B, C. So you can look at this as an ending diagonal. I don't have a problem with it. The only issue that I have, if you want to be a stickler, is that this third wave, right, it's a little bit bigger than this wave 1, just by a touch. It's, if you measure this, and I measured this before I looked at it, it's, you know, that's kind of where equality is. So, you know, if we're following the rules and the guidelines, wave 3, it's not supposed to be bigger than wave 1. And that's a negative for an ending diagonal, you know, but it doesn't change the look of it. Everything else kind of works fine, because you seem to have 3 waves in there, you know, then you have another 3 waves in here, you know, and then you have another almost like a 3-wave move back in there. And then this second wave is bigger than this fourth wave, and everything kind of points, you know, to an ending diagonal in there. But listen, again, doesn't really matter. It's just the way this kind of looks, the way it converges, and then, you know, kind of selling off. Now, I talked a little bit about, you know, how to know exactly when to take this. Well, you know, if you're like me, I started to kind of sell it as soon as I saw that this market is struggling. And that probably was somewhere up into these levels when I started to get the first sell-offs in here. And the market made one more high, which kind of squeezed me up a little bit into my trade. And I had to, you know, just adjust a little and just kind of, you know, took a little bit of a hit. And I said, I don't know, I'm going to hold on to it a little bit on here, because I think this trade is still viable, right? But if you wanted to be more sure that this is something that could happen, you have to wait for the first sell-off, right? And the problem with that is sometimes is that, you know, this thing could just kind of continue to crash and you're going to miss it, right? Another way to do it is to just kind of start small with a very small position, let's say quarter of a position, and then when it sells off, then you add to it, because now you have confirmation, and then you enjoy better. Maybe that's even a better solution for trading on the short side, right? You're just kind of testing the waters, you know, getting in a little bit in here in case you get stopped out or squeezed out of it, then it's a smaller loss. Then once you get confirmation, and usually when you break before some of those key levels, the market is sending you a signal that says, man, you know, this is a pretty good sell-off. You almost have like a double top in here. The RSI is dropping, and you know, I think this is going to be a short. And then you add a little bit on a pullback, and then you enjoy a ride lower. So these are kind of the ways that I kind of look at these markets, and we've done a very similar trade in oil not that long ago. We shorted oil, and I talked about it on Twitter and everywhere I could about, you know, the shorting commodities and in oil and in agriculture. We took a similar trade in corn, right? And that's in the grains market, so it doesn't really matter where we are, but it's just things that you know, attract me when I see you know, a fifth wave in development. Something similar I'm watching right now, for example, for the US dollar, because I think you know, we are in some type of a fifth wave in there. I just need to see a little bit more from that market to kind of start to warm up to more shorts in the US dollar. Now that market, it's not as aggressive to the downside possibly as some of these commodities are. These are way sharper, way faster, and they reward you much better. Some other markets, they're not. And I wanted to you know, close off with this and just kind of let you know on that. It's a little bit easier to get rewarded on the top side on a wave 5, because usually these drops are stronger than to be rewarded on the downside on a 1, 2, 3, 4, and 5 for a move higher. This is much more common, and you get rewarded faster because markets take the they take the escalator up and they take the elevator down. On the bullish side, you're not getting rewarded as easily, right? It has to be a pretty hot market for this to take place, and the move out of here has to be kind of an ending diagonal, and then, you know, to kind of get a burst of a move. Usually, you know, when you sell off, markets take a longer time to unfold to the downside to create a base. You know, if you study, let's say, Wyckoff or all these, you know, there's a bunch of moves that can still happen sideways before you actually get an explosion out of the market. So I like, you know, when I look at fifth waves trading, I like to catch fifth waves. When I look from the bottom, I usually wait for the first move, then wait for a B wave, and then I trade the C wave higher, right? But when it comes, you know, to selling a rising market, you know, then I'm usually getting pretty impatient and I'm starting to kind of short it. But another way to do this is just have a wave A in here, then you can short a B wave and then look for a C wave decline. If this move, it's an impulse. With that, guys, I'll leave it. Don't forget to visit me in the pro room. There is a link below, and trade with me. Be part of my trading group in there if you want. Otherwise, leave me a comment, press the like. You know, thank you for being a part of this journey and in this channel. We're kind of quickly growing. 4,500 subscribers, I think we've passed. We're on our way to 5,000. So thanks for being here, and I appreciate you as always. Have a great day. I'll see you on the next one. Bye-bye.